Boom, we are alive, ladies and gentlemen. Thank you for joining us. And today we're going to be taking a look at Bitcoin, Ethereum, because Ethereum is about to explode, Avalanche, also gearing up for a rip, Fetch, Link, and Solana, all geared up to move alongside with Bitcoin as well. This is a drastically different market than we've seen in the past. So let's just dive in and take a look. So on the screen here, we have a nice daily chart of Bitcoin. One of the things we've been watching is this beautiful accumulation, SOS, and breakout pattern for Bitcoin. If you don't know this stuff, you need to learn it. It is so powerful. I have never seen anything as reliable as this in the markets. Everybody talks a lot, but very few people get any of this right. This type of methodology has existed for 100 years plus by Mr. Richard Wyckoff and still works today for a very important reason. Human emotion hasn't changed and human nature has not changed. So this stuff is going to work, and I'm going to share a little bit of the secrets on why that is. So we've seen our spring, our first micro SOS, our second sign of strength, our second last point of supply, and we are now fully into a move which is likely going to take us up into the $47,000 to $50,000 area. A lot of people are expecting a retracement for Bitcoin. As we went over yesterday, I do suspect we are going to see a bit of a retracement, but I'm going to share what I think that looks like. Personally, after all the homework I've done, I bet we go upwards of $50,000 and we start to form an accumulation range, something like here, before going to new all-time highs in the hundreds of thousands of dollars per Bitcoin. Yes, hundreds of thousands of dollars per Bitcoin. Not today, but in a very short period of time, that looks very probable. I've always said your money is, or Bitcoin is going to become the most valuable when your money is the least safe from governments. And people are finally starting to realize that it's not just your money that's not safe from the government, it's you too. They would probably remove you from this planet if it improved their balance sheet. And it's important to understand that Bitcoin helps solve some of those problems. It's one of the long reasons why this has been our North Star and guiding light for this fundamental market. Now, some of the reasons why I like things like Ethereum is we need option, we need choice. Decentralization requires that there is not just one money, but that there is many. Now, technology, video games, I think these are the Trojan horse for removing some of the power that be inside of the hands of very few and helping get it out into the hands of the many. I've always said this, I think people often think that, they're going to be a Bitcoin maximalist because, yeah, I think Bitcoin is this ecosystem's money. The problem is, though, is you cut yourself off from any of the other potential gains that are out there and any of the potential movements. There are going to be many companies that exist in the future that find new ways to create value, and there will be exponential growth within that. As Bitcoin grows, as it becomes more valuable in dollar terms, it will become less volatile and the upside will be reduced significantly. Now, there could be a switch here. We go from Bitcoin from 100,000 to say $6 million. My very first Bitcoin YouTube video was Bitcoin's going to $6 million. But here, just for fun, let's make some far out advancements. And remember, this isn't going to happen today, but I could see moves upwards of 100 and maybe even up as high as $240,000 with some of these upwards extensions. But more importantly, probably at least to 160,000 within the coming 3 years, and maybe as high as 240,000 on this next move. But as the dollar and the trust in that dollar starts to decay, we could see something akin to hyperinflation, where all asset prices basically go sky high. We were looking at the S&P 500 yesterday. It's about to break new all-time highs. Many assets within the S&P 500 are about to get back into their new all-time highs. And it's not because the asset is worth more. It's because the dollar is worth less. The trust in that economy is worth less. And people around the world are starting to trust less the governments and the societal contracts that they signed into. So again, where does that lead us? Just for Bitcoin here, I see a quick move up to around 50,000 and probably a 3 to 6 month reaccumulation channel to bring us over here to 0.7 for the Livermore Wyckoff, or the Livermore and kind of a mix between the Wyckoff trading methodologies. We've seen this before in the past. If you want to learn more, you can watch my previous video. Ethereum gearing up beautifully in what appears to be an accumulation schematic. Actually, one of the most powerful accumulation schematics as well. So a bit slow, but where is it here? This is the accumulation schematic 2, where in phase C, we never come all the way back down to the bottom to test the range. Here, I believe our spring never came back down to test the bottom of the range. This is the most powerful accumulation schematic that we have in our little guidebook here, and we have over 500 days of accumulation going into Ethereum. I suspect that once Ethereum starts to move, it's going to rip into its previous all-time highs quite quickly. We'll probably get our first check and test around 3,500. This next move probably brings us to 3,500 before we see again another reaccumulation channel before continuing higher. How long that takes is in no short duration. We know already that if you have 500 days into an accumulation cycle, you can expect at least half of that time. Yes, at least half of that time will be spent moving upwards. Sometimes it is close to the same amount of time spent in accumulation that you get in the upcycle itself. You can go back and do all that research. We've gone over this in other videos. I wanted to take a closer look at Ethereum as well, remembering that one of the things we do is not just look at accumulation schematics, which are usually between the 300 to 900 day accumulation cycle, but also reaccumulation schematics. These are part of our private members educational series. Hyper valuable to know how this stuff works, when and why, and to look out for the footprint of the large market operators, because you can cut out all the noise of the YouTubers who are like, oh my God, Bitcoin's going up, Bitcoin's going down. Look and learn, and you will make very confident decisions in these times. The next cycle of distribution is usually the hardest. It's when to take profits. Getting into the market for our team and for our group has actually been a lot easier than learning how to get out of the market. You need to actually really adjust your type of personality. Both of these require different hats to wear. One to get in the market early and one to find out how to take profits, but we won't focus on that now. This is a reaccumulation cycle. Also, what we're witnessing here with Ethereum, it has just broken through the top. So again, here's a horizontal trading range. Again, kind of rough drawing here. We've just broken through the top. We're going to see an SOS probably up to 2,300, see another backup, and then we are going to continue upwards of $3,500 and probably higher for Ethereum in the coming months. Next, I want to take a look at Avalanche. On the smaller time frame right now, Avalanche is creating a reaccumulation range. This is so valuable to learn. I cannot express to you how important it is that you learn how these horizontal trading ranges work. So remember, the sickness of the new investor comes from over trading and lack of education and community support during that process. So if you want the cure, join our private members group where there's a no risk guarantee. If you're not happy, we'll just give you a refund by going to arcanebear.com/private. The links are down below. If you're not happy, we'll just give you your money back. No questions asked. You'll be like, oh, my dog died. I can't afford dog food. Great. Here's your money back. Whatever reason that happens in that first 30 days, we will give you a refund with no questions asked. Anyways, some skin in the game for you guys. Makes it easier for you to learn. We give all this information basically away for free on the internet anyways. But if you really want to learn, you got to put some skin in the game. So that's a secondary process. So in our private newsletter, we just went over this stuff. I want to share with you guys as well, because all of the private Bear members are already many of you are already in this position. Number one, I want to point out for the shakeout and the spring, equal volume supply signature. Ladies and gentlemen, if there are people out there that are trying to tell you what's going on within the Wyckoff trading ranges and they are not looking at volume and supply signatures, they have no idea what they are talking about. These are some of the most important aspects of the trading range. It's not just that, oh, look, there's a horizontal range. It's what is happening within the supply signature. That is the basic characteristics of supply and demand, and you need to know how they work. First off, note, again, the supply or the shakeout and the spring equal supply signatures. And then secondarily, we'll zoom in a little bit here and focus on the next test here. Boom, supply signature, and the jump across the creek. Boom, here, equal supply signature. Now, some of you in the private group had asked questions about the jump of the creek, so I want to go over that now. The jump of the creek is kind of this vague line that follows right above the top of all of the wicks of the candle basically and just runs into the center of the VPVR usually. It doesn't all of a sudden dip down below. That's not how the creek works. The creek moves and then moves right into the horizontal of the VPVR, which you can see on the right hand of the screen. If you don't have the VPVR, it means you need to update your trading view and pay for a little bit of a higher one. If you don't have it, you don't need it, you can largely just draw that. Last week we sent out an email because we jumped across that range and are now forming what appears to be, again, a beautiful horizontal trading range right as the jump against the creek and the backup and the test. Boom, boom. We have already moved up on less supply today. Another strong feature of understanding the Wyckoff methodology is something called effort versus result. I will zoom back out here on Avalanche and use it. It is a great example. Here it means how much effort is needed in the supply to send the price up or down, both directions are equivalent, and how much result comes out of that. So if we have X amount of supply coming into the market here, this one, and we get this price pressure upwards, it's a pretty limited in movement. But here we have much less pressure on the supply. On the bottom right-hand corner of the screen here, you can see it. I will highlight it in by pulling out one of my handy funky tools here. This supply signature, this price spread, this supply signature for this current price spread. Right now, we are having a more significant result compared to the effort that was necessary within that supply signature move. These are hyper valuable things to understand. Again, I cannot express to you how important it is to know this stuff. Anyone who trades ranges without doing this horizontally, I just don't think that they know what they're talking about. You can make a lot of money from affiliate links for Bybit. Don't trust that they know what they're talking about. They made most of their money off other people losing money. Again, we would probably not charge for the private group, but we found that it's better for people to pay because then they actually do the work. So the paywall is to keep people who are really interested in doing the work there and the community strong, and to make sure that if you are going to learn these things, because again, I'm basically giving it to you for free right now, but most of you won't do it until you put skin in the game. So that's just maybe a helpful little tip for figuring out how you better yourself as well. Start paying for stuff. Anyways, let's go to a smaller time frame here for Avalanche, just again to point out this reaccumulation range. This is also something that's known as scale invariant. I've talked about this so many times. It is such a cool thing to learn and understand. If you just go to Google and type in scale and variance, you'll quickly see on the right-hand side of the screen here that as you zoom in and out of something, you have a very fractal nature to the universe. This exists actually everywhere. The way a leaf pattern grows is very similar to how your lungs grow, which is very similar to how water carves out mountains. Scale invariance is a beautiful type of mathematic and physics experiment, statistics. It runs through many areas of life, energy, other variables as well. It is a beautiful thing to understand, and it functions within our ecosystem here as well, which means that we can zoom in and out of a chart, and we can find a horizontal trading range on the 45-minute. We can find it down here on the 15-minute, and lo and behold, look, as we zoom out all the way out, for Avalanche, we find an even bigger horizontal trading range that has taken place. This is one we've talked about many times, and I just want to share it again because I know a lot of you are learning this stuff for the first time. The falling wedge is only valuable when you understand the horizontal trading range that it is moving through. Do not just look at the falling wedge, especially on short time frames. It is a waste of time and energy. But when you find a falling wedge that has 400 to 500 days of accumulation moving into it, boom, extraordinarily powerful moment to be paying attention to the market. So that's what scale and variance is. You can find the same things on the daily that we do on the 45-minute, that then we do also find on the 15-minute here. It's, again, a very beautiful thing to understand, and it is extraordinarily important for our little market niche here as well. I suspect that when we finally get these next moves, for Avalanche, we're basically going to run from where we are here, probably upwards of $47. And why do I think that? Let's take a look at our Fetch trade. So if you're in the private group, Fetch is something we've been watching for quite some time. We think the narrative between AI and crypto is extremely big. One of the first parts that we talked about was this accumulation pattern here. This is again on the daily. So let's get rid of the RSI because it's just adding noise. As we zoom in on the 1 hour, we saw a secondary reaccumulation range, which is where we started to make a big trade. Although I had to dip out for a little bit and do some dance homework. This was the next reaccumulation range that took place, and now we are forming what appears to be an even more bullish reaccumulation range. Fetch is about to go for another run. So if you're still in this position, wait. Look at this rising gradient bottom as we had looked at with Ethereum and other reaccumulation patterns. I suspect we're going to break above into the 6,500 area, do a quick backup, and who knows how much higher we could go for Fetch. Link is in the exact same area. So just for fun, daily on the link, 500 days of accumulation. Again, talking about this scale invariant nature, 500 days for reaccumulation. Zoom in on the 1 hour. What do we notice? Multiple reaccumulation ranges. We saw a primary reaccumulation range take place within the box, a second one outside of the box, and now a third larger variation of that accumulation range take place now. Now you could make an argument that this was actually just the primary support, but it's still a beautiful accumulation range. You got an extraordinarily tight horizontal range set up right before going up 50 to 60% on Link, while Bitcoin has been relatively stable. People always ask, well, why don't you just stay in Bitcoin? Ladies and gentlemen, if you just want to keep buying Bitcoin, you do that. But I promise you, there are going to be other things that outperform Bitcoin, because as Bitcoin gets bigger, its volatility is going to decrease, which means its ability to move up in price by a multiple X fold is also going to decrease. It's our money. I've said that every single video for the last 3 years. It's my favorite choice for the new money, but we need better on-ramps, we need more technology, and we need more people in this system, which means we need more ways for them to play. Both Avalanche and Solana fit that criteria. I think gaming is going to be the next big on-ramp. We've talked about all that in our venture capital area. But more importantly, look again here with what's been going on with Solana. Solana performed multiple reaccumulation ranges within the box, reaccumulation range, reaccumulation range, reaccumulation range, and now a very big reaccumulation range outside of the major trading range itself. Solana is going to go higher. Okay, I know a lot of people are ultimately confused by how some of this works, but look, the next move Solana is going to make is probably upwards of $100 to $124 with very little resistance in between. When you have a market maker who's been accumulating an asset for 500 plus days, they do not just simply pump the market a little bit. They want to get every single last person buying Solana upwards of a few $100s before they start to exit. We are still very early in this market cycle. Anyone who's telling you otherwise doesn't know a damn thing about how market works. That's it. This is very simple. I'm surprised still so many people get this wrong, and then we get so few views on our videos because we've been right so many times about this. In 2020, I was one of the very few people who were early on screaming, this is going to be a huge bull market. Get in and stay in. And we were ultimately justified in that movement. So with little donkey mule's ass help here and little Buddha over here beside us, we hope you guys enjoyed today's video. If you want to learn this stuff, the sickness of most investors is coming from that over trading. So to cure that, join somewhere where you're getting the education. Take that risk-free bet, because right now there is so much money that's going to be easy to make if you are calm, confident, and know where you are in the markets. This is Teal with the Arcane Bear. I'm signing off for the rest of the day. I hope you guys enjoy your weekend. I just thought this one was imperative because there's a few that look like they're ready to go probably somewhere between here and the end of next week. So you can see you guys in the next episode.